Pat asked a $50,000 prop firm challenge and 11 trading days. No overnight holds, no revenge trades, just one indicator and a strict set of rules. I'm going to show you exactly how I did it, step by step. By the end of this video, you will know exactly how prop firm challenges work, what the rules are, and how VWAP gives you a massive edge to pass one. This works whether you're starting with a 25K challenge or a 150K account. Let's get into it. Here's my credential. I attempted my first prop challenge in 2024 and blew it in 4 days. I lost $1,847 of my own money on entry fees before I figured out what I was doing wrong. The second attempt, using the exact VWAP system I'm about to show you, I passed in 11 days with a $3,219 profit on a 50K account. First, let's cover exactly how prop firm challenges work. You pay a one-time fee, usually $150 to $600 depending on account size. You get a simulated account with real market conditions. You must hit a profit target, typically 8 to 10% without violating any rules. Hit the target and they fund you with real money. Simple concept, hard execution. The 3 rules that kill most traders. Number 1, the daily drawdown limit. Most firms cap you at 4 to 5% max loss per day. On a 50K account, that's $2,000 to $2,500. Blow that once and you fail. No exceptions. Number 2, the maximum drawdown, usually 8 to 10% total. That's your absolute floor. Number 3, consistency rule. Many firms require at least 5 trading days to pass. You can't just YOLO one trade and win. Here's why those people fail. They treat the challenge like a gambling session. They try to make 8% in 2 days. They chase after a red day. They size up after a win because they feel invincible. I did every single one of these things on my first attempt. The prop firm doesn't care about your feelings. It only cares about the rules. Now let's talk about VWAP and why it is the perfect indicator for a prop challenge. VWAP stands for Volume Weighted Average Price. It resets every single day at 9:30 a.m. It shows you the average price where all the volume traded that day. This matters because institutional traders, the funds, the banks, the desks, they benchmark their fills to VWAP. When price is above VWAP, institutions are in profit on the day. Below VWAP, they're not. Here's the VWAP rule I used for the entire challenge. If MES is trading above VWAP at market open, I only take long trades, period. If it's below VWAP, I only take short trades, no exceptions. This single filter eliminated 70% of my bad trades. Bad trades come from fighting the trend. VWAP tells you the trend in real time. Now, let's add the VWAP rejection entry. I wait for price to pull back to VWAP, not break through it, just touch it and reject it. On the 5-minute chart, I look for a candle that wicks down to VWAP and closes back above it. That's my entry signal. My stop goes 4 points below the VWAP wick. My target is the prior high. On MES, that's typically a 1 to 2.5 risk-reward ratio. At $5 per point on MES, a 10-point target is $50 per contract. On 2 contracts, that's $100. A 20-point target is $200. Over 11 days, I averaged $293 per day. The target was $4,000 profit, 8%, and I hit $3,219. Under the target, you fail. I cut it close, but I passed because I never blew a daily limit. The hardest part of the challenge is the psychology on red days. Day 4, I was down $847 by noon. That's almost half my daily drawdown limit. My instinct was to add size and win it back. I almost did. Instead, I closed everything, logged the trade, and walked away. Day 5, I made $612. If I had revenge traded on day 4, I would have failed. The prop firm is literally designed to make you revenge trade. How to pick the right prop firm? 3 things matter. 1, trailing drawdown versus static drawdown. Trailing drawdown is harder. It moves up with your equity peak. Static drawdown stays fixed from day 1. Always pick static if you can. 2, the profit split. Most firms offer 70 to 90% payout once funded. 3, scaling plans. The best firms let you scale from 50K to 200K once you prove consistency. Top Step and Apex are the 2 I have used personally.
The 5-day minimum is your hidden advantage. Most traders try to rush the challenge. I use the 5-day minimum as a strategy. Day 1 through 5, I traded light. 1 contract only, targeting $150 per day. That's $750 over 5 days, which is almost 1.5%. Then on days 6 through 11, I scaled to 2 contracts and pushed for the remaining 6.5%. This kept my drawdown intact in the early days when I was still finding my rhythm on that specific account. Here's your 3-point recap. 1. Only trade in the direction VWAP tells you. Above is longs only, below is shorts only. 2. Enter on VWAP rejection candles on the 5-minute chart. Stop 4 points below the wick. 3. Size conservatively, 1 to 2 contracts max, and never revenge trade on red days. These 3 rules are the entire system, nothing else. 2 resources to help you execute this. First, my free VWAP and SMC Confluence cheat sheet is linked in the description. It shows exactly what I look for before entering any trade on a prop challenge. Second, if you need a brokerage account to practice before spending money on a challenge, Webull has 0 commission futures trading. Link is also in the description. Next video, I'm breaking down 7 things I learned from losing $47,000 in my first year of trading. That one will save you years. Last thing, drop a comment below. What prop firm are you targeting, or have you already attempted one? Tell me the size, the firm, and whether you passed or failed. I read every single comment. And if this video helped you, subscribe. I post a new trading video every single Tuesday and Thursday morning. See you next week.